Yo, what's going on, guys? Let me go over today's market recap. As I did not end up taking any trades today, I ended up fading everything, and I'm going to go over why. So coming into market open overall, was leaning kind of neutral, slightly more bullish though, just because of if we want to see what we've been doing overall. Hold on, is this 4 hour candle going to chud me? Let's see. No, okay, good. So, if we look at like higher time frame, obviously it's like a respect versus disrespect kind of moment here. We have this monthly gap, which we were talking about in the trade recap yesterday. By any means necessary, could end up coming lower into this gap and filling it more because it is a monthly gap, so you have to give it time to breathe. And we also are technically displacing out of a daily gap, right? Technically, in this disgusting range that we have going on here. But the thing is, why I was leaning slightly more bullish coming into the market, it was more like short-term bullish. Reason being is because we did bounce off this daily gap, and then we had to move lower here, and then we retraced to a very solid area in this higher time frame range around 0.6 to 0.5. So really, really good rebalance on this range. And then overall lower, really just no targets. Like this is just pure high resistance, huge rejection wick. I did not really want to short this. Short within this range here, towards this being my DOL, especially since we are delivering off of a monthly candle, and we also have a retrace inside the range on the 4 hour here, which is kind of setting us higher. So with that in mind, I was leaning slightly more bullish up until we hit this unfilled 4 hour, right? And this unfilled 4 hour was a super clean draw. Reason being is because it was actually equal highs as well with the London session, right? So it was an unfilled 4 hour with equal highs being the target. So excellent draw on liquidity, super good draw. So definitely short term anyway. For today, I was more bullish leaning up until that 4 hour at minimum, right? So coming into market open, let's see what market open ends up doing. So market kind of just ends up ripping higher here, and at this point I was really wasn't expecting any entry here. I had a very strong feeling. I kind of was debating taking a short in a sense with this if we got really good displacement, just because the volatility probably would have carried it straight to my TP, because Judas's just be like that. Probably wouldn't have taken it anyway, maybe, but that's kind of in hindsight. Excuse me. But holy, but yeah, so this 4 hour gap, unfortunately there was really no valid entry here. There was no 5 minute gap. I think it might have been like a 3 minute, yeah, 3 minute continuation. Very hasty if you did take this. Definitely not a huge fan. And there's really no gap here, probably like a 30-second or something. Not for me. Ended up taking our draw on liquidity here, so at this point now leaning a lot more neutral. If we started kind of rapidly more displacing to this 4 hour, the draws that I was expecting for us to take were previous day high, which was the next draw, and then the S&P 500 was kind of the powerhouse today. And this is like one of the big reasons behind why I ended up fading the trades today that looked good but weren't good, because the asset today that was in power was 100% the S&P 500. And when the asset, for example, if you trade the NASDAQ purely, and if you need to be, like, I can't stress enough, in my opinion anyway, how important it is to pay attention to the S&P 500. Because the S&P 500, if it is doing all the damage, and what I mean by this is if it is taking all the draws on liquidity before NASDAQ, that is the asset with the power. Because that's the asset that's taking the liquidity. So that's the asset that has to deliver that liquidity elsewhere, right? Not NASDAQ. Even though they are the same asset, or not the same asset, even though they move off of each other, you have to give respect to the asset. So ignoring the S&P 500 when you're going to take a trade is completely silly in my opinion. It's just ridiculous. Like, there's no need. You need to be always looking at the S&P 500. If like 9 times out of 10, what I've noticed from just my trading experience alone, if NASDAQ and the S&P 500, if you're willing to take a trade and you're looking for that displacing candle towards your draw and you're trying to get your entry, if the S&P 500 doesn't displace at the same time as the NASDAQ, like I would probably argue to say like 7 or 8 times out of 10, your trade's going to get slammed on its forehead, because both assets aren't correlated, and that's just such a big problem when it comes to trades, especially entries. I think it's very important for entries. Entries and manipulation, they're both very important for correlation. So yeah, trade of the day today, it was actually like pretty just crazy. I think it was like right here, was it? Yeah, this was trade of the day, which is kind of crazy. Overall, I probably wouldn't. I don't think I would have taken this. I think this is a super good eval trade. I don't know about funded. Maybe if you had the confidence, if you had the conviction, for sure, go for it. But with this, we had, it wasn't a gap on Nasdaq, but there was a solid retrace, I guess, in this lower time frame range. And then on the S&P 500, let me check, 952. We had this 5 minute fair value gap, as you can see. No, where is it? Oh, I'm on the complete wrong day. Cool. It was, where was it? Yep. Yeah. So this gap right here, this 5 minute gap right here. If you were super confident in a bullish narrative, I guess, but I do kind of think that this is still really hasty. I mean, worth a shot, but the rejection wick here, and technically this is an RB. It's just a bit meh. It's kind of sketchy. I don't think I would have taken this, to be honest, but this was overall a trade of the day. I do think it is very hasty, but if you had your stop loss right here, whatever, it doesn't really matter. Go for a 1-to-1 with this. This is just a simple 5 minute continuation with the New York opening. And New York AM opening gaps, so the first 5 minutes that New York AM opens, we retrace into it on the S&P 500, we displace out, we get that inversion. We don't get the CISD, but either way, the RR on this is kind of close. But I do believe that, like, if you did want to take this and you were super convicted in a higher price action, or for a price to go higher, the break even on this is fine, right? Because the next candle, your break even on this, and then cool, you hit your TP. Right, cool. Pretty hasty trade though, in my opinion. Definitely not something that I'd really take on a funded. I think it is pretty good for eval though, for sure. Definitely worth a stab on an eval, but on a funded, I think it's just super hasty, super premiumed, and you are targeting high resistance liquidity. And yeah, there's also an unfilled 5 minute with kind of like shitty LR leading up to your stop loss, so it's like definitely nowhere near A rated in my opinion, or A plus, but it's solid. Worth a stab if you're super convicted. So then from here, overall, I was kind of just looking for continuations, if we had like a 15 minute for value gap opening and whatnot. And yeah, so overall we ended up putting in this internal high right here. And then we ended up getting a setup, I believe, right here, which looked okay, which we had like a little LR leading up to LR, because this is LR on top of LR leading up to a very good draw on liquidity, which is more LR and leading up to Asia. But the thing about this is, during this time, the reason why I ended up fading all of these trades today was because the S&P 500 just looked like it really did not want to go higher. And if we look at the S&P 500 at this time, right, this is 10-14-ish, and there is also, by the way, this trade is like kind of donut behavior, to be honest, because there is a 15 minute for value gap opening up at your stop loss. Yeah, we're coming into a higher time frame candle opening, being the 10-15 macro. So you like the manipulation chances to get manipulated out of this trade is super high. And also we actually didn't even inverse this gap. So if you took this, journal it, please. It's not a good trade. And yeah, so going back to where the S&P 500 was at this time. So this is going to be 10-14. Yeah, 10-14, ES is here. So ES is all the way down here at 10-14, and also what did it do? It kind of put in a current high a day. So the S&P 500 took every single draw. It took previous day high, it took Asia, it took it all, right? It took everything. And when the S&P 500 does that, you need to pay respect to it. You need to give it the respect that it deserves, because it's the asset that took all the draws. So it's the asset that has the liquidity that it wants to deliver elsewhere, maybe have a retrace in the higher time frame before taking, right? And with this obviously gets completely shredded. This trade gets destroyed, and then we manipulate into the 15 minute for value gap at a 10-15 PO3. Now, this trade is solid. I'm not going to lie. I was very heavily debating on taking this. Hold on, 10-17. I think if we skip a few candles here, I think we get like, there it is. There's this displacing candle, which a lot of people ended up taking today, right? So this was the trade that a lot of people ended up taking, targeting whatever they may want to target here, Asia high, 1-to-1, internal high, whatever it may be. And I did fade this trade. Now I was really liking this though. It did look really good. But if we look at this, 10-19. Let's go to 10-19, and where's the S&P 500, right? S&P 500 is right here. Does this really look like strong displacement on the S&P 500? Not really. And this 1 minute candle here at 10-20 as well. What is this doing? It's leaving a rejection wick at the top with a... No, I mean, the body close is bigger than the wick, but we have a 5 minute for value gap, right? Where is it? Oh my god. Oh my god, bro. Are you serious, bro? Where was it? Yeah, right here. Bang. So, oh my god. Right? So the S&P delivers into a 5-minute fair value gap. Now at this point, I was still open to taking this trade, but what I wanted to see was a disrespect versus respect, right? So we had this 1-minute gap that opened here on the S&P 500. We also had one that opened on NASDAQ as well, right here. And at this point, I really just was too uncertain. I wasn't a fan of this. Reason being was, of course, because of the reaction that ES placed inside of this 5-minute fair value gap. So I set a condition for myself, and it was simply just a 1-minute fair value gap. Disrespect versus respect. If we end up retracing into this 1-minute fair value gap that we have here on the S&P 500 after hitting this 5-minute, and we fail to displace out of this 1 minute and close above or get like a really nice body closure, so it's like, for example, we have this gap here, we retrace into this gap, and if we get like a close like this out of this gap or whatever, I probably would have been willing to take this and just went for a 1-to-1, even if it did scuff my RR ever so slightly. But again, I'm not someone who trades based off of RR. I trade based off of logic, so I don't really care. If I ended up missing this trade completely because of this, if it did end up playing out, I was completely fine with that, because I have to give respect to ES, because ES just took out a bunch of liquidity, and it has to have somewhere to deliver it to, right? It did come into a 15-minute fair value gap, cool, but this reaction was just not nice. I did not want to see this reaction at 10:20. This was not what I wanted to see. So that's when I set the condition versus disrespect versus respect. If this 1 minute fair value gap down here ended up getting respected and delivered us higher out of this, I probably would have ended up entering this trade, even if it did cause me to get a kind of a worse entry. Well, it probably wouldn't have, because NASDAQ would have also retraced lower here, and then I probably would have got like my entry like right here, which is really not that bad. Either way, but as you can see from the S&P 500, we tapped this 5-minute gap and we absolutely destroy this 1-minute gap, and we even get a 1-minute CISD. And at this point, when I seen this, I knew this trade was 100% not going to play out, right? Unless the SMT, or we had like an SMT and it was super lucky, but overall, S&P 500 was just super bearish in this case. In my opinion, and that's why I ended up fading this, because I had to give respect to the S&P 500. Respect is due when respect is due. And we also had a 30-minute fair value gap lower here, which is a way better gap to be looking at inside the range. It's C of the range, so that's exactly what we would want to see. But overall, after this, I did end up getting off because I just wasn't a fan of how price was moving, especially with the NASDAQ. I did want to see like an instant sort of resweep here, deeper into this 15-minute fair value gap, and then 10:30 to manipulate. And as we can see, 10:30 didn't really manipulate. 10:30 actually ended up opening higher here, and at this point I was like, no, okay, you know what, I'm just going to get off, because I'm not a fan of what the higher time frame candles are doing, and obviously the correlation here was just trash. If we look at 10:32, yes, it's just doing the same thing that it was doing. It's just printing terrible candles, going higher and then moving lower, right? And it's just not, I'm just like, yeah, do you know what, this price action is just shitty, I'm going to get off, right? Now, we ended up, I think, eventually having that resweep, and then eventually getting a really nice candle right here. I think it was a 2-minute inverse, if I'm not mistaken. Yeah, right here. Ended up getting a really clean kind of displacement, and then this is where you see like the disrespect versus respect. We end up respecting this 1-minute gap, we end up displacing out of it. Cool. This is not a bad entry. Anywhere within here is a pretty solid entry. I was off the charts at this time, so I did not end up catching this trade, but I do think this is pretty good. I don't really think this is really a valid break even for this trade, but if you want to be safe, you could have went break even at this 10:33 high or 10:21 high, whatever you want to do. And I think, yeah, this trade, even like look at the chop here, I think just after this it was just not worth it, in my opinion. I think this trade actually also gets saved by an SMT. No, it doesn't. Okay, but the chop here is just bad. The delivery looks poor, and we're getting pretty close to 11 AM here. It's definitely just not my territory. It's not my body. This is not my body, you know what I mean? So this trade does end up playing out though, and this is probably trade of the day, in my opinion. Even though like this and the 5-minute earlier was trade of the day, and both of these trades are pretty shitty, the narrative behind this one is very good, but again, the delivery and the chop is just not very suitable. I think this ends up running everything, if I'm not mistaken. Yeah, ends up running the whole shebang, so there you go. That's when we end up running the draws. But if you notice here, the reason why we actually end up doing this is why? Because the S&P 500 actually had a proper retracement on the higher time frame to C of the range, after taking out all of this liquidity. So you have to give it the respect that it deserves, because if we've just taken out a shitload of liquidity on the S&P 500, what's it going to do with all those orders? Like, use logic here. Like, what's it going to do with all those orders? Is it just going to, you know, just come back into like a 15-minute fair value gap and a super big premium after taking all of these big draws on liquidity and then going higher? I don't think so, right? It's going to want a retrace inside, way deeper into the range, which is what we got. And then we ended up displacing higher towards those draws in the end, but obviously way too late in the session for me, in my opinion. I just didn't want to touch this, and it was already off the charts by then. So yeah, no trades today. And yeah, I think we ended up, actually, there's another pretty shit setup that I want to go over, which happened pretty close to market open, I believe. I think it was a 3-minute. Yeah, this 3-minute inversion right here, terrible setup. Reason why? Body candle closure, whack. Terrible close on this. Second of all, what else was a S&P 500 at this time too? See, it's all about like when the more powerful asset is the one that you need to pay attention to more, in my opinion. Like, instead of looking at the Nasdaq, and if the Nasdaq is the more powerful asset, then cool, keep your focus on Nasdaq more than the S&P 500. But if the S&P 500 is doing the job here, is doing the deed, like, you know, S&P 500 is the one you need to be looking at. So this is at 9:48. Again, like, this close is just pretty poor. It's a really bad close. And target wise, I mean, you're targeting an unfilled 5-minute gap. But again, it's a mech model for me. I just don't like mech models. I think they're kind of stinky. Obviously, respect to Blake though, excellent trader. I don't even think he really takes much mech models himself. But yeah, I just don't like mech models. It's very counter trend. You're trying to catch the top of the move for a reversal, praying that it goes to the 5-minute. It's just, yeah, no, it's just not. It's just not my body again. It's counter trend, and there's a lot of things wrong with this trade. Terrible close, not good displacement. You know, big wick. Actually, hold on. Oh fuck. How do I? Oh my god, bruh. 53. Bro, why does this not work? Yep, so the wick was bigger than the body as well. Wicks do the damage, body tells the story. And yeah, overall, that's just it. Like, there's a couple setups today. This 3-minute, definitely worst setup of the day. 5-minute cont down somewhere around here. I'm not sure where it was. I think literally here. Was it? Yeah, 5-minute cont here from ES. Decent setup, very hasty though. We had this here, continuation with the 50-minute. I think this was pretty solid, good narrative, but again, just looking at the S&P 500 would probably make you change your mind on this. And then this here is technically setup of the day, this inversion right here at 10:46, but super late into the session. And it's just not my body again, and the price action leading up to this is complete poo. And looking at the S&P 500, it is printing the most ugly candles I've ever seen in my life. So yeah, I was definitely off before that. But if you did end up taking this, fair enough. This is good trade. It has good narrative. Just price action was pretty poor here, so I decided to get off. So yeah, that's going to be it for today's recap, guys. No trades today. Ended up fading everything. Just wasn't a fan of today's price action. Draws on liquidity were super good, pretty obvious. S&P 500 was kind of just cooking us because that was the powerful asset today that was controlling sort of the market when it came to these two assets in particular. S&P 500 was the one with the power, and Nasdaq was just doing what it was told like a good boy, while the S&P 500 was absolutely bulldozing through everything that the Nasdaq wanted to do. Because as you can see here, the Nasdaq did really want to go higher, but the S&P 500 was like, fuck you, I don't care, I'm going to do whatever I want to do. So yeah, paying respect and paying attention to the S&P 500 is 100% worth it in the long run, because as you can see, I think I've made loads of videos like this where the S&P 500 has failed to distribute at the same time as Nasdaq. I'm actually going to make a little thingy right here, but like, this is the thing, right? If we have Nasdaq doing this, boom, key level, inverse, so we have DOL, and we get like our little inverse here, and we have a clean like continuation model, and you take this setup, all well and good. Now this setup is fine if the S&P 500 also has a similar story, right? If the S&P 500 has manipulated into something, or if we have like an SMT or something with like a low right here, then this is completely fine to take. If the S&P 500 distributes and shows displacement towards that draw or towards wherever you're targeting at the same time as the Nasdaq. However, if, for example, we have this on the Nasdaq, and then we have this, for example, on the S&P 500, as this is happening, so uncorrelation, like I'm telling you, bro, like 7-8 times out of 10, this is what's going to happen to you. I'm being like dead ass, like 7, I would say 7 times out of 10. I don't have actual data. I should probably actually gather like actual data on that, but just from market experience alone, like I've seen it happen so many times. This setup has a way lower probability than playing out if the S&P 500 looks like this. However, if the S&P 500 looks like this, as well as the Nasdaq, this setup has a way higher probability of playing out, like a way higher probability. I would say like this setup with this has like 40%, 45, 50% max playing out. Setup like this is when you're talking like 75%, right? So this is like a huge thing for me that I've noticed recently over the past couple of months, that the S&P 500 is super important to be paying attention to. And if you're not paying attention to it, lock the fuck in. You should be. It's super important asset. So always be paying attention to it. And yeah, that's going to be it for today. A little cheeky tip at the end there, I guess, to help you guys fade trades that look good, but if the S&P 500 says it doesn't look good, more times than not it doesn't. It's not going to play out, right? So yeah, always just something to take into consideration. Always be paying attention to the asset that's leading, and obviously today the asset that was leading was the S&P 500, considering it took out all of these 1, 2, 3 draws while the Nasdaq was like still down here. So huge SMT, even though this SMT was kind of redundant because in my opinion it was against a higher time frame, but that doesn't matter. S&P 500 grabbed all this liquidity, so it has to deliver it somewhere if it wants to move higher. It's not just going to move like this, right? All the way up. Like it has to have ray traces. Like that's how the market moves. So yeah, that's gonna be it for today's recap, guys. Explained why I ended up fading everything today. Let me know in the comments though if you guys ended up taking any setups today, if you've seen anything that you liked. And except for that, I'll catch you guys in the next video. Hope you have a blessed rest of your evening, morning, day, whatever time you're watching this at. And yeah, super excited for the future of this channel. Going to be documenting my entire journey to profitability on this YouTube channel for everybody to see, just to prove that if you really want something, you can do it. And yeah, I think I actually uploaded my 100th video on the channel yesterday, which is pretty cool. Forgot to mention it, so that's nice to see. And yeah, we've been grinding and we're not going to stop, and we're going to keep going. So with that, I will catch you guys in the next trade recap, which will be tomorrow. Have a great rest of your evening, wherever. I already said that. Anyway, peace guys, have a good one.